Hello and welcome. Have you ever wondered what the portfolio size of the superinvestors is? How many shares they own and how they got such a fortune? I'll explain in this video. What are superinvestors? Superinvestors are investors who consistently achieve above-average returns over long periods of time and often significantly outperform the market. Their success is usually based on in-depth knowledge, careful analysis, a clear investment strategy, and often an intuitive feel for the market. Many of them have developed their own investment philosophies, which they have implemented with exceptional success. Here are some of the best-known superinvestors, along with detailed information about their philosophies, approaches, and significant investments. 1. Warren Buffett. Philosophy: value investing. Approach: Warren Buffett, the CEO of Berkshire Hathaway, is perhaps the best-known investor in the world. He follows the philosophy of Benjamin Graham, the father of value investing, and looks for companies that are undervalued but have strong fundamentals. Buffett often invests in companies with a lasting competitive advantage, moat, solid management teams, and a clear business strategy. Well-known investments. Berkshire Hathaway's portfolio includes large holdings in companies such as Coca-Cola, American Express, Apple, and Kraft Heinz. Buffett is also known for his penchant for buying companies outright, such as Burlington Northern Santa Fe, BNSF, and GEICO. Portfolio size: $331 billion. 2. Charlie Munger. Philosophy: value-oriented investing, behavioral economics. Approach: Charlie Munger, Warren Buffett's longtime partner, is known for his multidisciplinary approach to investing. He emphasizes the importance of mental models, a collection of concepts and principles from various disciplines, such as psychology, economics, and mathematics, to make sound investment decisions. Munger is a strong advocate of the virtues of rationality and honesty in investing. Well-known investments. Along with Buffett, Munger has participated in the selection of many of Berkshire Hathaway's largest investments. 3. Peter Lynch. Philosophy: growth at a reasonable price. GARP. Approach: Peter Lynch, known for his time as manager of the Fidelity Magellan Fund, pursues a strategy of growth at a reasonable price, GARP, which is a mixture of value and growth investing. He looked for companies with strong growth rates that were not overvalued in relation to this growth. Lynch also emphasized that investors should invest in what they know and understand. Invest in what you know. Well-known investments. During his time at Fidelity, Lynch led the Magellan Fund to exceptional returns by investing in a variety of industries and companies, including Dunkin' Donuts and Ford. 4. George Soros. Philosophy: reflexivity, macro investments. Approach: George Soros, founder of the Quantum Fund, is known for his theory of reflexivity, which states that market prices are influenced by the perceptions of market participants and vice versa. This interaction can lead to self-reinforcing cycles that cause markets to diverge from fundamentals. Soros uses macroeconomic trends and speculative strategies to profit from these cycles. Famous investments. Soros became famous for his bet against the British pound in 1992, where he made a $1 billion profit in a single day. Portfolio size: $4.27 billion. 5. Ray Dalio. Philosophy: principles-based investing, macro investing. Approach: Ray Dalio, founder of Bridgewater Associates, takes a rigorous, systematic approach to investing based heavily on macroeconomic trends. Dalio is known for his all-weather strategy, which aims to construct portfolios that are resilient in all economic environments. His principles and discipline in investing are comprehensively described in his book, Principles. Well-known investments. Bridgewater's all-weather portfolio is designed to perform well in a variety of economic conditions. Dalio has also successfully bet on macroeconomic trends, such as his bets on the rise of the Chinese economy. Portfolio size: $20 billion. 6. Carl Icahn. Philosophy: activist investing. Approach: Carl Icahn is a legendary activist investor who acquires large stakes in companies in order to actively intervene in management and implement changes that he believes will increase the value of the company. Icahn often uses aggressive engagement to promote restructuring, mergers, and acquisitions. Known investments. Icahn has invested in many large companies such as Apple, Netflix, and eBay. He was instrumental in the breakup of Texaco and the split-up of Motorola. Portfolio volume, $11.92 billion. 7. Benjamin Graham. Philosophy, value investing. Approach. Benjamin Graham is considered the father of value investing and is the author of the classic works The Intelligent Investor and Security Analysis. Graham's approach is based on the analysis of company balance sheets, the valuation of assets, and the consideration of a safety margin in order to minimize the risk of investments. Known investments. Graham's investments focused on companies that were trading well below their intrinsic value. His philosophy has influenced generations of investors, including Warren Buffett. 8. David Einhorn. Philosophy, value investing, long-short equity. Approach. David Einhorn, founder of Greenblatt Capital, is known for his long-short strategy in which he buys shares of companies he believes are undervalued while shorting shares of companies he believes are overvalued. Einhorn is famous for his ability to spot weaknesses in companies' balance sheets and profit from them. Well-known investments. Einhorn became famous for his short position on Lehman Brothers before its collapse. He has also successfully invested in companies such as Apple and General Motors. Portfolio volume, $2.05 billion. 9. John Paulson. Philosophy, event-driven investing. Approach. John Paulson is a hedge fund manager who became famous when he successfully bet against the U.S. subprime mortgage market and made billions when the financial crisis broke out in 2008. Paulson's approach often focuses on macroeconomic events and market inefficiencies, which he exploits through targeted bets. Well-known investments. Paulson made over $4 billion in 2007 by betting against subprime mortgages. His Paulson and Comers later invested in a variety of sectors, including gold and healthcare. Portfolio size, $1.45 billion. 10. Seth Klarman. Philosophy, value investing. Approach. Seth Klarman, founder of the Baupost Group hedge fund, is a prominent proponent of value investing. Klarman is known for his cautious, often contrarian approach to the market and his emphasis on the margin of safety when investing. He emphasizes careful analysis and is known for his patience until he finds the right opportunities. Well-known investments. Klarman's book, Margin of Safety, is considered one of the most influential works on value investing. He has successfully invested in various assets, including distressed debt, real estate, and equities. Portfolio size, $3.55 billion. 11. Joel Greenblatt. Philosophy, magic formula, investing. Approach. Joel Greenblatt is known for his magic formula, which is a simple method for selecting stocks based on a combination of high return on capital and low price-to-earnings ratio. Greenblatt is an advocate of a disciplined, rules-based approach to achieving long-term excess returns. Well-known investments. Greenblatt founded Gotham Capital and made substantial profits from his strategy. He has also published several books on investing, including The Little Book That Beats the Market. Portfolio size, $6.62 billion. 12. John Templeton. Philosophy, global diversification, contrarian investing. Approach. Sir John Templeton was a pioneer of global diversification and invested in markets around the world, often in times of crisis when valuations were particularly low. He believed in the importance of long-term thinking and contrarian investing, buying when others were selling. Well-known investments. Templeton founded the Templeton Growth Fund and achieved great success through his international investment strategy. Among other things, he invested in Japan during the Great Depression and after the Second World War. Of course, not all of them were. There are many superinvestors. Some are under the radar screen and don't want to go public. It certainly makes life easier. Now we come to the performance of the superinvestors. Let me take a comparison with the S&P 500 index. Invex had a 5-year average performance of 13.73% and a 10-year average of 9.94%. If we look further back in time, we see the index with an average performance of 11.72% over the last 15 years. Over 20 years, the performance is 7.54%. This means that if you track the ETF with the index, you will also achieve around this performance. Not bad, isn't it? Without doing too much math, what do you think the performance of your investments will be? Let me know in the comments. I compare it over 10 years. The following super investors came out on top with 8 to 9.99% performance. First Eagle Investment, T. Rowe Price Equity Income Fund, Private Capital, Chris Davis, Barrow, Hanley, Mewini and Strauss, Hotchkiss and Wiley, Yachtman Fund, Yachtman Asset Management, Yachtman Focused Fund, Brandes Investment Partners LP. The following super investors took the top spots with a performance of 10 to 11.99%. Vanguard Healthcare Fund, Dodge & Cox, Bill Ackman, Bill Nygren, Prem Watsa, Smead Value Fund, Warren Buffett. In the next performance level, there are the two best super investors with a performance of an incredible 12.90% and 18.80%. That is an incredible amount. Chuck Aker with 12.90% and Ron Barron with 18.80%. I will certainly make some videos about the best super investors. Many of you have an investor who serves as a role model or a mentor. For me, it is Warren Buffett. An extra video is definitely coming. His story is simply a must for anyone who wants to be successful on the stock market. Conclusion. The super investors mentioned above have redefined the art of investing through their unique philosophies and strategies. They share some common traits, such as a deep analytical approach, discipline, patience, and often a contrarian mindset, which has enabled them to achieve extraordinary returns. These investors offer valuable lessons for anyone looking to get to grips with the world of finance and investing. While their strategies are not easy to emulate, they offer valuable insights into the mindset and discipline needed to succeed over the long term. I hope you enjoyed the video, so I would be delighted if you would give me a like, subscribe to the channel, and activate the bell. That way, you won't miss any more videos from me and you'll be informed immediately when a new video is published. Thanks for watching the whole video, and see you soon.